Okay, hi everyone. We're going to try to start right on time. My name is Janelle Orsi from Sustainable Economies Law Center, and I'm filling in for my coworker Mwende today as MC and tech support. So I'll try to attend to everyone's needs. First of all, I want to say that this event is part of a month of events that we're calling Tenants Without Landlords. So we have a series of workshops. I'm going to drop in a little link to more information about this month, but it's also a fundraising campaign for us. We're trying to raise $25,000. And so anyone who feels inspired to contribute, please do. And your being here is also part of your contribution. So thank you. We're also going to be giving 10% of the funds that we raise to Wood Street Collective, which is a group of unhoused people in Oakland who've been evicted by the city. And so we're supporting them. As folks come in, please mute yourself, or maybe I'll do that. I have the power. All right, all right, thank you. And yeah, so what was I gonna say? So yeah, please contribute to our campaign. Thank you so much for being here. I guess you could go to the next slide, Tobias. So I'm not clear where I'm getting mic pickups. So yeah, anyone who's unmuted, please mute yourself. Okay. So we have a bunch of sponsors for this month of events. They are shown here on this slide that you could see. We just want to thank our sponsors who really gave us a boost for this campaign. And let's go ahead to the next slide. So we have two forms of interpretation here today. Accessibility is really important to us. And so we have Kevin, who is doing ASL interpretation, who's going to be on screen the whole time. And then we have Diego, who'll be doing Spanish interpretation. So first of all, round of applause for our interpreters. This is really hard work, takes a lot of skill and energy. So thank you all for being here. I want to ask Diego to go ahead and give instructions for anyone wanting to listen in Spanish. Diego will give instructions right now before I open up the Spanish channel. Do you want to go ahead, Diego?
Yeah, of course. Thank you, Janelle. Hi, everyone. Good afternoon, good evening. Diego Ponce here with the Community Language Cooperative, the CLC. Thank you for having us at your space. We're going to try to practice language justice. Once we finish saying this statement in English and in Spanish, we'll start the interpretation. It'll be simultaneous interpretation here in English and in Spanish. And at that moment, we're going to start the interpretation. And when the interpretation is on, you'll be able to see that globe icon that says interpretation there in the bottom right-hand corner of your computer screen. We'll ask you to please select that globe icon when you see it appear on your screen, and please select your preferred language. If you happen to be joining the meeting on your cell phone or your tablet, you'll instead be looking for the More button or the three dots button so that you can select your preferred language that way. If you're not fully bilingual, I'll encourage you to select your preferred language so you can utilize the interpretation if someone were to speak in the opposite language. If you are bilingual, feel free to listen to everyone in the original language. You don't need to select any language channel if you don't want to do so, and you don't ever have to hear my voice as the English and Spanish interpreter. As always, when you select your language, you can check mute original audio to not have to hear both languages at the same time. And as always, I like to remind all people, just please pay attention to the speed in which you're speaking. Just please make sure you're speaking at a conversational pace for both interpreters, and just please make sure that you don't pick up your reading speed. So thank you so much for that. Buenas tardes a todos y a todas. Yo soy Diego Pons. Estoy aquí hoy de parte de la Cooperativa Comunitaria de la Justicia del Lenguaje. Gracias por invitarnos hoy a su reunión. Hoy vamos a comprometernos a servir a la justicia del lenguaje. Lo que eso significa es que queremos crear un espacio para que todos puedan participar e involucrarse en el idioma de su corazón, simplemente el idioma en el que todas las personas se sientan más cómodas. Vamos a continuar hoy utilizando la interpretación simultánea en Zoom para crear ese espacio en inglés y en español. Ahora, cuando yo termine de decir esto, vamos a activar la interpretación, y cuando esté activada la interpretación, usted va a poder ver un icono de un globo de la Tierra que dirá interpretación. Ahí abajo en la derecha de su pantalla, le voy a pedir que por favor seleccione ese icono del globo de la Tierra y por favor seleccione su idioma preferido. Si usted está asistiendo a esa reunión en su celular o en su tableta, por favor busque las opciones que dicen More, que quiere decir más, o posiblemente el botón de 3 puntos para que usted pueda seleccionar su idioma preferido de esa manera. Si usted no es completamente bilingüe, yo le voy a aconsejar a que seleccione su idioma preferido para que pueda utilizar interpretación cuando alguien esté hablando en el otro idioma. Si usted sí es bilingüe, siéntase libre de escuchar a todos hoy en su idioma original y como siempre cuando usted seleccione su idioma, puede hacer clic en silenciar el audio original para no escuchar ambos idiomas al mismo tiempo. Muchas gracias. So we're ready to get started. ¿Listos?
Great. I'll press the start button to get the Spanish channel going. All right. One more thing I want to say, and thank you so much, Diego, for all of that, is many people are here to get, well, it's not the only reason they're here, but many of you want to get credit for your continuing education as lawyers. So we have a sign-in sheet for our lawyers who are seeking MCLE credit. I just posted that in the chat. I'll post it again at some point, and I'll also post links toward the end of the webinar to our evaluation and certificates. So stay tuned for that. We can go ahead and introduce our speakers, but definitely tell me if I forgot anything, speakers. So we have my wonderful coworkers, Tobias Damloor and Tia Tarek Myers, who, by the way, work so hard at the Law Center helping our clients get property tax exemptions. So they're going to be sharing what they learned. And then we have a volunteer attorney from the law firm Shute, Mahali and Weinberger. Lauren Tarpey is here to share her wisdom on property tax exemption. So I think we can go ahead and hand it over to our presenters if you all are ready.
Sure. Thank you, Janelle. And just note that a heads up to the audience that that we're Lauren and Tia and I, we have experience with helping clients get property tax exemption and file the applications, but we're all still learning, and we don't consider ourselves complete experts on the topic. So we're just a heads up that we're all still learning, and we're just sharing with you what we've learned through our experiences working with clients on this.
That's right. Thanks, Tobias and Janelle. All right. So welcome, everyone. I'm Tia. I'm one of the staff attorneys at the Law Center. This is our very simple agenda. We're going to go over the basic information on how to obtain property tax exemption for your clients, if you're a lawyer, or for your radical real estate projects. We'll go over who are eligible landowners, the eligible activities on the land, and a few special situations. We'll also have Q&A at the end, but feel free to put in questions in the chat and we'll read them later. But first, I wanted to introduce y'all to some of our amazing clients. This is a list of some of our radical real estate clients. They're an amazing bunch of Indigenous land stewards and land justice groups. The ones highlighted in orange are orgs that we've helped apply for property tax welfare exemption. Some of them have received it and some are in different stages of the process. Just earlier this month, we were able to celebrate because we heard back from the county assessor's office that they approved our property tax welfare exemption application for our client Shelterwood Collective. They're an Indigenous, Black, and queer-led collective of land protectors and cultural change makers. And they have a 900-acre community forest in what is now called Sonoma County. And we helped them receive tax exemption for all 900 of those acres. So we're happy about that. Okay, so the basic info part. What is welfare exemption? Well, the welfare exemption is a property tax exemption for certain properties owned by nonprofits. Eligibility is based on two distinct factors. One, who owns the property, and two, for what purpose the property is being used. We'll also go over a few special situations. And as you can see, we have color-coded the slides to show which steps are about the organization, those are orange, and which steps are about activities on the land, that's green. And we'll give you a copy of the slide deck later on. So to qualify for property tax welfare exemption, the primary operating purpose of your organization must be charitable, hospital, religious, or scientific. And that sentence sounds weird because hospital isn't usually used as an adjective, but in the law it is. So I looked it up, it's right. And the property must be used exclusively for the same qualifying purposes. Note, if only a portion of your property is used for these purposes, then you can have that portion of the property exempted and pay reduced taxes, and then pay taxes on the rest of the property. Here are the basic steps. First, you get an OCC from the BOE. That's the Organizational Clearance Certificate from the California Board of Equalization. Then you submit a first-time welfare exemption application to the county assessor's office. If you receive something called a finding sheet, you have to respond to it. It's just their request for more info, and then there'll be a site visit. And once you're approved, you're not done. Every year you have to file an annual application. It sucks, but you just have to do it every year. So step one is to get the OCC. And to qualify for an OCC, your group must be a nonprofit or eligible LLC. Your group must not materially enhance the private gain of any individuals. Your group must be exclusively organized and operated for qualifying purposes. Your group must have an acceptable statement of irrevocable dedication of assets, and also an acceptable dissolution clause. What does that mean? Well, let's see. So the irrevocable dedication clause shows your commitment to a qualifying purpose, your organization's commitment to a qualifying purpose. And the dissolution clause shows that upon dissolution, your assets will go to another 501c3. So you have to make sure your client has an acceptable irrevocable dedication clause and an acceptable dissolution clause in their articles of incorporation. The BOE requires specific magic language as required by section 214A6 of the Revenue and Taxation Code. And this here is just a screenshot of the articles of incorporation of one of our clients to show you the language. And in the slides, there's the magic language that the BOE really wants. I'm not going to read it because it's all just legalese, but you can copy and paste it for your clients later on. I just, beware that many nonprofit organizations use a template provided by the Secretary of State to draft their articles of incorporation. That makes sense, right? If you're Googling how to form a nonprofit, you find that the Secretary of State has a template, and you would imagine that that would be sufficient for all of your needs, but not all nonprofits have property, and this template does not have the magic words that the BOE wants to see in the dissolution clause. So here's a screenshot of the Secretary of State's template. As you can see, the dissolution clause, which cannot be customized, states that the organization's assets must be distributed to an organization operated exclusively for charitable, educational, and/or religious purposes. But the BOE's property tax rule 143 requires a reference to a certain section in the Revenue and Tax Code when referencing educational purposes. And all of that is to say that if your client doesn't have the magic language in their articles of incorporation, or if your client used the Secretary of State's template, then all you have to do is fix it. It's fixable. You just have to amend their articles and file it with the Secretary of State to include the magic language. And yeah, it's a common problem that we've had because the template just doesn't have the magic language. Okay, once you figure out that your client is eligible, you fill out the form BOE form 277. This is the form to apply for your client's organizational clearance certificate. And as you can see, it's only 2 pages long. Pretty simple. But we want to highlight how to fill out some of the difficult portions. And one is the fiscal year of claim section of Form 277. And you know it's complicated because in parentheses, you can see it says see instructions. And we read, every time we read the instructions that the BOE provides, and it takes us a while to decipher the rule. So we figured we'd spell this out for you here. So the first thing to keep in mind is that the BOE's fiscal year runs from July 1st to June 30th. So let's say there's a nonprofit called the Blue Bob org, and they receive land from Green Grace on January 31st, 2023. The next day, when filing a claim for an organizational clearance certificate, what year should Blue Bob org put on their OCC claim? enter your guesses in the chat, and I'll give you a few seconds to type that in. All right, I'm realizing I can't see the chat, but that's okay. If you put 2022 to 2023, then your answer is right, even though Blue Bob Org received the land in 2023. Okay, so finally, after filling out that form, you have to submit the following documents: the articles of incorporation of the organization or other formative documents, a tax exempt status letter, financial statements, and pamphlets, brochures, or web pages describing your group's activities. And that is step one. I'm going to hand it over to Tobias for step two.
Thanks, Tia. So now, as Tia said, I'm going to talk about the second step in getting property tax exemption based on welfare exemption for your client, or if you're a potential applicant watching this for your organization. The second step is to submit a first-time application for welfare exemption, which is also called BOE Form 267. So as you can see, this is an animation showing the 2-page form, BOE 267, from top to bottom. Even though it's called BOE 267, you don't submit it to the Board of Equalization. Instead, you submit it to the county assessor's office in the county where the organization's property is located. So as Tia mentioned, the BOE reviews the OCC application to assess whether the organization meets the requirements for welfare exemption. And this form, the BOE 267, is for the local assessor's office to evaluate whether the use of the property meets the requirements for welfare exemption. And as Tia mentioned, the use has to be either charitable, scientific, religious, or related to hospitals. One quick note about the first-time application is that you can submit it to the county assessor while the OCC application is pending. So you don't have to wait for your OCC to get approved. You can submit the OCC first, and then while it's pending, submit this BOE 267 to the county assessor's office. One of the most important things to pay attention to when filling out the BOE 267 is the fiscal year of the claim at the top of the form, just like on the OCC form. But this is slightly different and a little bit more complicated. I'll explain. So this is a screenshot of where you would enter the year on the form. It's right at the top. Before I go into detail about how to decide which fiscal year to put in, I'll give some background info. So similar to the Board of Equalization, the assessor's offices in all the counties in California are all on a fiscal year, not a calendar year. So just like Tia said, their fiscal year starts from July 1st and runs through June 30th. So for example, fiscal year 2023-24 starts on July 1st, 2023, and then ends on June 30th, 2024. Each year, when the assessor prepares its property tax bills, they look to see who is listed as the owner on the deed for each property on January 1st at 12:01 a.m. And then once they've found out who's listed on the property on that date at that time, they send the property tax bills for the upcoming fiscal year to the owner who is listed on the deed. And as some more background information, the date January 1st is called the lien date because that's when the property taxes become a lien on the property. And a lien on the property means that the assessor can foreclose against the owner if the owner doesn't pay the taxes. So whoever's listed on the owner as the owner on the deed on January 1st of each year gets a lien put on their property by the assessor's office for payment of the property taxes, so that if they don't pay up, the assessor's office can foreclose on the property and then sell it and use the proceeds to get the property taxes paid. Also, another piece of background is that the due date for the BOE 267, which is the first time application, is usually February 15th. If you were the owner of the property on January 1st and you want to get the exemption for the upcoming fiscal year. So for example, let's say an organization acquired their property on January 1st, 2023. They just happened to acquire it on January 1st for the convenience of this example. Then they have until February 15th, 2023 to submit their first time welfare exemption application for the upcoming fiscal year, which is 2023-2024. Okay. So now what if the new owner acquires property after the lien date of January 1st? Let's say they acquire it on January 31st, 2023, as in Tia's example, with Blue Bob's organization. And let's say they want to get an exemption for the 2023-24 fiscal year. So that's the fiscal year shown by this blue arrow here. Since they weren't the owner on the deed on January 1st, you apply a different rule to calculate their filing deadline. The rule says that they have to file their first time application by either the date of acquisition plus 90 days or February 15th of the following calendar year, whichever is earlier. So that's the filing deadline for the first time application is either the date of acquisition plus 90 days or February 15th of the following calendar year, whichever is earlier. So looking at Tia's example again, which is earlier? January 31st plus 90 days or February 15th of the following calendar year. The earlier date would be January 1st plus 90 days, which is May 1st, 2023. And that would be the filing deadline for them to file so that they can get the exemption for the upcoming fiscal year, 2023-24. Okay, so now what if, like Tia mentioned, Blue Bob's organization also wanted exemption from property tax starting January 31st, 2023, which was the date they acquired the property, and running until July 1st, 2023. Well, together with its first time claim for the 2023-24 fiscal year, they would also submit a first time claim for the 2022-23 fiscal year, which is denoted by this blue arrow here. The deadline for that second claim form would be the same. It would be the date of acquisition plus 90 days, or February 15th of the following calendar year, whichever is earlier. So the filing deadline for that claim would also be May 1st, 2023. Because the claim would be filed after the start of the 2022-23 fiscal year, if it gets approved, then the organization's tax exemption would be prorated based on the number of days left in the fiscal year after the day it was acquired. So it'd be prorated based on however many days are left between January 31st, 2023 and June 30th, 2023. Some general tips for submitting the first time application. Read the form instructions thoroughly, as with all applications. Respond to all the questions on the form. If a question doesn't apply, just put N/A. Check the box for personal property and describe the personal property if the organization has over $10,000 worth of personal property on their land. And that's just any property that's not permanently attached, any property that's not permanently attached to the land or the buildings is personal property. Another tip is to include any required additional forms that the form BOE 267 requires. You also need to attach financial statements for each property you're applying for. And you'll see more about that on the form. A good idea is to attach a narrative statement for each property you're applying for, to give more detail about about each answers you're giving, especially about the uses of the property. And then finally, based on how busy the assessor's office is and how many applications you receive, they might not get to your very first time application before February 15th of the next year rolls around. So you might have to file multiple first-time applications by February 15th each year until they approve your request for exemption. Just real quick about step 3. Once you file the first-time application or applications, the assessor's office might give you what's called a finding sheet, basically a request for further information or documents. And that finding sheet might include a request for what they call proof of use, which is basically evidence that the uses you describe in your first-time application are actually the way that the applicant is using the property. This could include like copies of brochures or flyers, photographs, or a calendar of events clearly identifying the location, nature of the event, and the time of the event. And at least for the Alameda County Assessor's Office, they accept all of this on paper only. They don't accept digital filings. Same for the application form. They only accept paper filings. The next and final step, as Tia mentioned, is to complete a field inspection. As I mentioned, it can take multiple years to get scheduled, unfortunately, depending on how busy the assessor's office is and how limited their staff and staff time is. I've linked to a sample field inspection form so you can see what they're looking for on the site visit. And then after they complete the site visit, they're required to notify you in writing whether they approve or deny the application. If they deny the application, there are 2 things that you can do to appeal. First, you can file a property tax refund claim with the County Board of Supervisors. And then if that's denied, you can file a refund action in Superior Court. So basically like a lawsuit in Superior Court saying that the assessor was wrong and the applicant deserves or is eligible for property tax exemption. And if you are fortunate and you get your claim approved, congratulations. All you have to do each year afterwards by February 15th is file a 1-page form where they basically just ask follow-up questions about your use of the property and your organization. It's called BOE 267A. And I've linked to a sample form in the slide. It's not generally available though on the assessor's office's websites. Like the form they actually use is not generally available. Instead, they'll mail it to you, to the applicant, to the address that they have on file each year with some time left before the deadline to submit it on February 15th. So now I'll hand it over to Lauren to talk about a few special situations. And Lauren, just let me know when you want us to switch the slide.
Perfect, thank you. Thanks Tobias and Tia. And thanks everyone for being here today. My name is Lauren Tarpey and I am an attorney at Shute Mahaly and Weinberger. And I'm really excited to join you all to talk about a few special circumstances that might arise if your organization or your client's organization is eligible for the property tax exemption or is wondering whether they might be eligible. So if we can move to the next slide, please, thanks. So the first situation I'll talk about is fundraising on the site that's been exempt. So obviously fundraising is important to many organizations, and helpfully fundraising is allowed, and it won't jeopardize the organization's eligibility for the exemption, as long as the fundraising activities are occasional and don't result in unrelated business taxable income. So I'll talk a little bit about what those terms mean. Occasional is obviously a pretty vague term, and it's not actually defined super clearly in the law. It is defined as irregular or intermittent, which means that it starts and stops at intervals and it's uneven in occurrence. Again, not a ton of detail or help there, but there is helpful guidance in the assessor's handbook, which you can find online. And they provide some explanation of what that might mean. So fundraising that happens discontinually or periodically, and they reference maybe once a month or quarterly or certainly annually, will probably be found to be occasional. Fundraising that's more frequent than that, weekly, probably not going to be occasional. The other thing to note is that fundraising is defined in law to refer both to directly soliciting money and also the anticipated exchange of goods and services in exchange for money. So something like running a bake sale or having a silent auction would be included. And this other term that I mentioned, unrelated business taxable income, it's a bit of a mouthful, and it's defined in terms of, or with reference to federal law, and it's any income from an unrelated trade or business, which is any business or trade that is carried out to produce income and which is not substantially related to the organization's exempt purpose or function. So might seem a little tricky to draw the line there, but most fundraising, I think, most typical fundraising that an organization does is not likely to be classified as unrelated business taxable income. Another thing that's helpful to note is that another charitable organization can fundraise on property that is exempt from property taxes. That organization will also be subject to the same limits. So, it has to be occasional and can't result in unrelated business taxable income. And the organization that's doing the fundraising must also meet the requirements to qualify for the exemption. So, that includes that they're not organized for profit and they have an OCC. So I will switch to the next slide, please. Okay, the next situation to talk about is other organizations that use the property. So the law provides that other tax exempt organizations can hold meetings on exempt property as long as they're not doing so more than once a week, and their meetings are incidental to their primary activities, and they're not fundraising. Other organizations can also lease the property, and I'll talk a little bit more about these situations. So the other organization needs to be tax exempt and will be required to provide the assessor with their letter showing that they are tax exempt. If they're a smaller organization or a satellite organization, they can refer to their national organization's letter, for instance. That organization also has to satisfy the other criteria to be eligible for the exemption from property tax. And they might be required to file their latest tax return with the assessor if they're required by law to file one. I mentioned that other organizations can lease the property. This is a little bit of an interesting area of the law that has changed a bit recently, well, within the last 5 years or so. So previously, the guidance was that an organization that was leasing property needed to obtain an OCC or file a claim for the property tax exemption. And as you can see from what Tia and Tobias explained, that's a difficult process. But there was a case a few years ago that actually found that the organization leasing the property does not need to obtain an OCC or file the claim for the property tax exemption. So that's helpful, and still good to know, though, that that organization does have to meet the requirements of Section 214, meaning that they're eligible for the exemption, so they're not operated for a profit and things like that. And I have another form here that you or your client will need to fill out if you're allowing another organization to use the property. So when the organization files its annual filing, it would also need to file form BOE 267-0. And that form is the welfare exemption supplemental affidavit for organizations and persons using the claimant's real property. And basically it just requires the property owner to identify the use and the users of the owner's real property. Okay, next slide, please. All right, now I'm going to talk about 3 different exemptions for housing that are provided in the law. First, we'll talk about exemptions for housing provided for lower income households, housing for employees of the organization, and tribal housing. And I should mention that there is another exemption in the law for housing that's provided to elderly and handicapped families. But just in the interest of time today, we're going to stick to these 3. Next slide, please. So rental property that's provided to lower income households will get a partial exemption as long as the organization has an enforceable agreement with a local agency or a deed restriction or some other legal document that restricts the property's use to lower income housing. And the organization also must certify that the funds that would have gone to property taxes are used to maintain the affordability of the units. So in this context, lower income housing or households is defined by reference to the California Health and Safety Code, which itself references Section 8 of the Federal Housing Act. So if you're curious about what this looks like or what the requirements are, I would look there. And I mentioned that it's a partial exemption. And what that means is that the property will be exempt, or the portion that is exempt it's the percentage of the property serving lower income households relative to the total number of residential units that are provided on the property. And I will mention that there are a few other criteria that apply here to ensure that property is eligible for this exemption. And it's too complicated to get into today, but I've included the section down below for where you can find more information in the law on the criteria. And one situation I wanted to specifically mention is an organization that might be providing housing to staff living on site. If those staff or employees happen to be, oops, I think we want to go back just one second. I know I'm conflating the two a little bit, but if staff or housing happen to be lower income individuals or households, that doesn't automatically mean that the property is eligible for this low income housing exemption. I just wanted to mention that in particular. The property would still need to satisfy all these requirements, in particular, like having a document that restricts the property's use. And of course, there's another form to fill out here for this exemption, which is BOE form 267L. And this is the welfare exemption supplemental affidavit for housing for lower income households. And basically this affidavit requires that the claimant certifies that it meets all these requirements that I discussed. And it also requires a fair amount of documentation about the qualifying low income tenants, including the number of people in the households, their incomes, the total number of qualifying households. So there's a good amount of information that's required to be filed. Okay, next slide, please. Thank you. Okay, as we got a sneak peek of, there is another exemption for staff living on the property. So the law provides that housing and related facilities for employees are exempt as long as the residential use is institutionally necessary for the organization. And there's no extra form to file here, but form BOE 267, which is the regular form you would file for the exemption, requires documentation that the residential use is, quote, incidental to and reasonably necessary for the organization's exempt purpose. And this is just a little screenshot of the portion of the form that requires that documentation. So practically speaking, what this typically looks like is just a written statement that the organization would attach to its form that explains why it's necessary to provide housing for staff on site. And it's helpful with this particular exemption to know that there's actually a lot of guidance out there. And again, I mentioned the assessor's handbook earlier. I would recommend checking that out for more details here. But they explain that this requirement that housing be incidental to and reasonably necessary for isn't really that high of a bar. It might sound like it is, but it doesn't actually, the housing doesn't have to be essential or indispensable to the organization's exempt purpose. And there are a couple examples of housing that was found to meet this standard. So for example, if you provide housing for hospital staff, nurses, or employees, that is reasonably necessary for the hospital's purposes. And there's even an example of a tennis court on the grounds that was found to be reasonably necessary. So clearly there's some wiggle room there. Another example is providing housing for priests at a retreat center. Was found to be necessary because they were conducting the religious, housekeeping, and maintenance activities. One other thing to mention here about providing housing for staff is that it's okay to earn income when you provide housing, as long as the organization is not charging rent with a profit motive. And there are, again, a few cases out there about that particular issue, which is helpful. And this exemption should apply to temporary workers. So as long as their presence, again, is incidental to and reasonably necessary for the organization's exempt purposes, that should be fine. Next slide, please. Thanks. So the last housing exemption to talk about is the exemption for tribal housing, which applies to low-income rental housing that's owned and operated by a federally recognized Indian tribe or housing entity designated by the tribe, as long as at least 30% of the units are available to lower-income households at rents that are capped by law. The housing entity is a nonprofit, and any net earnings do not benefit any individual. So I wanted to explain that this particular exemption is separate from the welfare property tax exemption that we've been discussing, and it's codified under a different section of the Revenue and Tax Code, which I linked to down below. And it's helpful to know that the tribe doesn't need to meet all the requirements to qualify for the welfare property tax exemption, but it is a related concept that we wanted to talk about here. A tribe or housing entity will be required to provide documents to establish that it's federally recognized, that the entity has been designated by the tribe. And they'll also have to provide documents establishing a deed restriction, an agreement, or another legally binding document that requires that at least 30% of the units be made available to lower income households. And again, going back to the lower income households exemption that I talked about earlier, this provision has the same definition of lower income households. So it references the California Health and Safety Code and federal law as well. Next slide, please. Okay, the last special circumstance that we wanted to talk about has to do with conservation properties. So these are properties that are used exclusively for the preservation of native plants, animals, biotic communities, geological or geographic formations of interest, or open space lands that are open to the public for recreation and the enjoyment of scenic beauty. So there is a specific exemption that applies to this type of property. There are a few requirements to be eligible. So one is that the property is owned and operated by a scientific or charitable fund, foundation, LLC, or corporation whose primary interest is to preserve the natural areas. And the organization has to meet all the other requirements that we discussed earlier to be eligible for the welfare property tax exemption. Again, that means things like, that it's not operated for profit, it's used exclusively for the exempt purpose, et cetera. Next slide, please. Okay, two specific scenarios that might arise with conservation properties. So these are two scenarios that won't affect the conservation property's eligibility for the exemption. So in the first, the conservation property may earn revenue from activities that further its conservation objectives, and the organization may lease the property for a purpose that furthers its conservation objectives. So for both of these situations, to determine whether the activities that earn revenue or whether the lease is furthering the property's conservation objectives as required by law, the law looks to a, quote, qualified conservation management plan for the property. So this plan is really important for setting out what the conservation objectives are for the property. And the law provides actually a lot of requirements for that, for the plan. And I, again, recommend checking out the law if this is a relevant situation for you, just to make sure that, just to make sure that the plan satisfies the law's requirements. And there are a couple examples of activities that might generate revenue, but that nevertheless won't jeopardize the property's eligibility for exemption. So for example, the property can earn admission fees from, just for allowing people to come see the property. They can earn revenues from grazing leases, hunting and camping permits, and they can collect rents from caretakers on the property. So in all those situations and others like them, just the fact that the property earns revenue won't affect its eligibility for the exemption. So with that, I will wrap up the special situations, and I think we're ready to take questions.
Wonderful. Thank you very much, Lauren. That was excellent. Yeah, so we're ready to take questions right now. I see we have a few questions in the chat. Before we go on to our questions, Janelle, did you want to say anything about MCLE, or did you want to leave that to the end?
Oh, sure. I'll go ahead and mention that, and lawyers, you already know this, that there's always an evaluation form, and anyone is welcome to fill that out and give us input. I'm going to drop in right now a link to a Google form that's very easy for you to just fill out. And then I'm also dropping in a link to your attendance certificate, which you would want to download and keep for your records. So there it is. If you have any questions about the CLE, just let me know. And yeah, y'all can go back to the Q&A. Oh, and we need to drop in and share the slides as I hand out. I don't know when you wanted to do that. You want me to do that?
Oh, that would be great if you could,
Okay.
Janelle.
Great. Will do.
Okay, thank you. So I see we have a question from Sally. Are there similar exemptions available in other states to your knowledge? Michigan, for example. And I just want to read out Janelle's answer. Is for anyone who can't see the chat for some reason. The short answer is yes. I believe every state allows for property tax exemption. The processes vary a good deal, but the general principles are the same. Unfortunately, I don't have any knowledge about other states' processes. I don't know if you do, Tia or Lauren.
No, just California. Sorry.
I don't either. I apologize.
Thank you for answering that, Janelle. Yeah, I like your comment, Nicole, about how they keep this so simple. I think I agree. It tends to be complicated in a lot of aspects, but ultimately can save clients a lot of money. Let's see, Ellen Leonard, thanks for your question. You're asking, is there a definition of lower income for special situation number 1?
Yes, that's a great question. Thank you. So the definition for lower income households comes from section 50079.5. I know that's a lot, of the California Health and Safety Code. So maybe I can drop that in the chat if that would be helpful. And that section itself references Section 8 of the Federal Housing Act. So I can't give a concise definition of what how the law defines lower income households, but that, if you're able to sort of work through the different requirements in those two sections, I think you'll find your answer there. And I apologize that I can't give a more concise answer.
All right, thank you, Lauren. Oh, I see a message from Paola that Janelle, that the MCLE certificate isn't accessible, and asking if someone could change the privacy settings. So would you be
yes,
able
will
to
do.
do that? Thank you so much. Sorry about that. Let's see, Sally says, I had trouble with the MCLE sign-in form. As I typed, nothing appeared on the screen. Did I nevertheless get signed in? Oh, sorry, Janelle responded to that. Okay. Alejandra asks, any practical examples of what counts as occasional fundraising?
That's another really good question, because again, the term occasional is not helpful at all. So I would recommend looking at the assessor's handbook, and I can drop a link to that in the chat. They talk about several different examples of what might or might not be found to be occasional. And the general sense that I get is that something that is monthly or quarterly or annual will probably not be found to be too frequent. In other words, if you are fundraising more frequently than once a month, like let's say you're fundraising every weekend, that's probably not occasional. That's probably too frequent. So I think I would say probably monthly is probably the most frequent you would want to do it and still be considered occasional. But again, I'll drop a link to this assessor's handbook because they do have a number of helpful examples. One word of caution, the assessor's handbook is not binding law. It's just the recommendations of the State Board of Equalization. And as I mentioned, there was actually a case that overturned one of their interpretations. So I just want to caveat it, but I do think it's really helpful in providing, guidance on these kinds of issues, like what does occasional mean?
Thank you, Lauren. I see Paul Mabry has a question. So if processing the BOE 267 form may take multiple years to be approved, does the applying entity pay the regular taxes until such time as the application is approved? Will the assessor then issue a refund for past taxes that were paid? And my understanding, at least, is that yes, that's true. The organization who's applying for the exemption has to pay property taxes to the assessor as they get billed for them. And then once they get once they get the exemption approved, for all the fiscal years where they applied for the exemption, they'll get refunds for all the fiscal years where they were approved for the exemption. Does that match with your understanding, Tia and Lauren?
Yep, that sounds right.
Okay. Great question. Thank you, Paul. Let's see here. Nicole asks, what if a nonprofit is housed on the property and is basically fundraising all the time? Would that disqualify them for the exemption?
It's a good question. I can imagine that scenario. I think a lot of nonprofits probably are fundraising all the time. I think it just means that, I think the way that the law is written, it would be taken into consideration. The assessor would look at the fundraising activities, but they wouldn't necessarily disqualify the organization from the exemption. The way the law is written, it says that the assessor will not take into account fundraising on the property that's occasional and that that meets the criteria that I mentioned. So in other words, if the fundraising happens all the time, meaning that it's more than occasional, my understanding is that just means that the assessor would look at that fundraising and consider it, but that it's not necessarily disqualifying for the property tax exemption. Is that consistent with y'all's understanding, Tia and Tobias?
I have to admit that I haven't looked at that provision, but that sounds reasonable.
Same.
Thank you for answering that question, Lauren. Does anyone else have any other questions? I think you can feel free to put them in the chat or unmute yourself if you want to ask. All right.
Oh, I got distracted. I'll drop in the slides. This is Janelle.
Thank you, Janelle. No worries. Oh, I see Ellen Leonard has her hand raised.
Hi, Ellen.
Thanks.
Good to see you.
Thanks, Tobias. Hi, folks. I hope this is not an inappropriate question. Lauren, are you open to working with private clients on a land trust limited equity co-op project that I have long time been working on personally?
Thank you for that question. I think we should probably talk offline about that, but I really appreciate you asking.
Can you give your,
Yes.
is it okay to get your contact again from, oh, I guess it will be on the slides from the beginning. Thank you.
Thank you so much.
Erica says, I'm curious if anyone has any thoughts about what constitutes sufficient evidence that the property is being used right now for the follow-up from the assessor, or what constitutes use. The way I remember it, in the finding sheet, they request evidence of the use in the calendar year preceding the fiscal year that you're applying for. So like if you're applying for fiscal year 2023-24, they would want evidence of use in calendar year 2022. Sufficient, what constitutes sufficient evidence? I think, I mean, yeah, I gave some examples of like what they said could constitute sufficient evidence, like, you know, calendar events or brochures or flyers or photographs. I think also, like, if the client, photographs can be taken from social media, for example, like if the client or if the applicant has a lot of social media posts, then you can just take screenshots of those and submit those to the assessor as long as the date is clearly visible. So that's one tip about how to gather evidence of the use of the property that actually qualifies them for the exemption. Tia or Lauren, do you have anything to add about that?
I missed if you said receipts. Did you say?
Oh, no, I didn't say receipts.
Receipts for, I don't know, contractors that are working on the land, or things that you're buying to, you know, fulfill your mission on the land might help. I think we've done that.
That's a great idea.
Yeah, I think the only thing I would add on that is, and I think Tobias, you mentioned this earlier when you talked about the fact that you might have to file your first filing multiple years in a row. So it might be difficult to remember, oh, we should be keeping records of what we're doing all of these years, so that when the assessor does look back, you've got good records for that span of time, which could be quite a long time. Yeah,
that's definitely correct. So it's a good idea to, if you're a lawyer helping an organization apply for this, then it's a good idea to remind them to keep records in any form that could, basically any form that could be printed out and submitted to the assessor's office of the use of how they're using the property, and that it's qualifying for the property tax exemption. Let's see, Gen is asking, how are CLTs and co-ops navigating these rules where moderate income households are residing on their properties? So I think co-ops would not be, we just have a minute left, by the way, but I think co-ops, if they're for-profit and they don't have a tax exemption, then they would not be eligible for welfare exemption, unfortunately. I wish they were. CLTs, I'm actually not sure, community land trusts, if they're moderate income households. I think maybe, Lauren, it sounded like what you were saying, that they might get property tax exemption for only a portion of their property.
Right. I think that's the case. I mean, I'm not familiar with this specific scenario, but yeah, partial exemptions are definitely available where a part of the property is being used for an exempt purpose and another part is not. And it would just be, the percentage of the property that's used for the exempt purpose. Like, I don't think that there is an exemption for moderate income housing, but I'm not aware of that.
Yeah, I would agree. I think we're out of time. I'm sorry, I see we have a raised hand, but I think that we should end on time. And if you have any more questions about property tax exemption, I welcome you to go to www.theselc.org and sign up for our legal cafe on the events page. Even if you're an attorney, if you want to talk to someone about property tax exemption, you could talk to us about it at a legal cafe. Tia or Janelle or Lauren, did you have any last words before we close out?
No,
Thank you so much, everyone.
thank you.
Thank you, interpreters. Bye.
Thank you, interpreters. Yes, thank you.
Thank you, interpreters. I'm going to end the interpretation in Spanish now. I think. I have to figure out how to do that. Never mind. Make sure you download the chat, folks, if you want to keep the links or grab the links before you log out. Yeah, awesome job, presenters. Thank you, interpreters. Thank you, attendees.
Thanks everyone for joining us.
Bye.
Bye.
Thank you.